And now for the latest business and market news, over to Jayne Edwards.
Thanks, Alan. Well, the US share market took a breath on Friday after a buoyant week, which has pushed the market to its highest level since the collapse of Lehman Brothers. Each of the indices posted slight gains. The renewed appetite for stocks came after the Federal Reserve announced it will pump $600 billion into the economy over the next 7 months to boost jobs growth and consumer spending, and after an emphatic victory for low-taxing Republicans in the midterm elections. The Fed's decision immediately stripped almost 1% off the US dollar and sparked a rally in precious metals and global stocks. Gold hit a new record above $1,397 and the Aussie dollar moved beyond parity and stayed there. US employment figures released on Friday also gave more cause for optimism, with an unexpected surge in payrolls, although the official jobless rate is stuck at 9.6%. Over the week, global shares reaped the benefits of the Fed decision, with Japan the strongest performer. Now with details from the local market, here's Tom Elliott.
Well, as you just heard, the share market was pretty strong this week, which is what happens when you print and then give away $600 billion new US dollars. Corporate activity was also behind some of the market strength. Now, first up, BHP had its bid for Potash Corp of Saskatchewan knocked back by the Canadian regulator. This was actually seen as positive by local investors who are now hoping that BHP might return to them some of its surplus capital. Foster's shares were not so strong during the week. It seems that Molson Coors, the big US brewer, has decided to sell out its 5% stake in Foster's. Now, the company is still a takeover target, but Molson Coors, it appears, won't be amongst the bidders. The Commonwealth Bank committed one of the biggest PR disasters in Australian corporate history. On the same day the Reserve Bank lifted official rates by 25 bips, the Commonwealth, of course, decided to lift its lending rates by almost twice as much, 45 basis points. This kept Commonwealth shares flat on an otherwise strong week. Retailing stocks were understandably weak. Of course, the higher interest rate goes, the less presents there are in the Christmas stockings on December 25th, and shares in JB Hi-Fi, Harvey Norman and, of course, Myer were weaker during the week. In corporate activity, it seems that demergers are the new black. Westfield was the latest large-cap stock to announce that it was going to split itself in two. In this case, it's going to create a separate property trust that will have a fair chunk of its Australia and New Zealand's assets, and they'll be kept separate, of course, from the US assets, which are under more pressure. There's also rumours that Westfield might want to bid for some of the troubled group Centro's assets, which are up for sale. Xstrata decided to lift its bid for iron ore miner Sphere Minerals. The bid's been lifted from $2.50 to $3 a share, but there is apparently an alternative proposal still in the offing. AXA, also late in the week, said that takeover might be back on. AMP is apparently talking to AXA's French parent. And finally, Channel 10 took the unusual step of offering board seats to both James Packer and Lachlan Murdoch, even though the latter is yet to buy a single share in the company. Winner of the week is Q-Deco again, up another 20% after reporting some more positive drilling results. Loser of the week is Leighton Holdings, down 10% after an unexpected profit downgrade.